Trade talk hopes rise, the yen on the defensive. On Tuesday, Dow Jones Industrial Average ended about 179 points lower at 26,548.22, its biggest one-day loss since May 31st. The S&P 500 also closed approximately 0.95% lower at 2,917.38, while the Nasdaq Composite fell 1.51% to close at around 7,884.72. The moves came after U.S. Federal Reserve Chairman Jerome Powell tempered expectations for a potential interest rate cut. Powell noted that the Fed will take a wait-and-see approach given how rapid recent economic changes have been, but added the Fed is insulated from short-term political interests. Against this backdrop, stocks in Asia were subdued on Wednesday. The Nikkei 225 in Japan declined 0.51% to close at 21,086.59. In South Korea, the Kospi closed just above the flat line at 2,121.85, while Australia's S&P ASX 200 slipped 0.26%. Mainland China shares struggled for gains on the day. The Shanghai Composite was down 0.19% to 2,976.28, while the Shenzhen Composite was largely flat at 1,560.51. In Hong Kong, the Hang Seng Index was slightly higher. Meanwhile, investors look toward developments on the U.S.-China trade front, with Presidents Donald Trump and Xi Jinping set to meet at the G20 summit later this week. European stocks closed lower on Wednesday as traders look for signs of what to expect from talks between the U.S. and China at the upcoming G20 summit. The Pan-European Stock 600 closed provisionally 0.3% lower, with auto stocks gaining nearly 1%. Markets erased losses after Treasury Secretary Steven Mnuchin said Washington and Beijing were about 90% of the way there on finding a trade deal before negotiations stalled. But equities in Europe dipped back into negative territory shortly after. Mnuchin also expressed confidence that Trump and Xi can make progress in talks at the forthcoming G20 meeting in Osaka this weekend. U.S. markets got a boost from the comments, with the Dow Jones Industrial Average climbing over 70 points, while the S&P 500 and Nasdaq indexes were also in positive territory. As for currencies, the dollar was marginally lower against European currencies, but gained against the Japanese yen. The U.S. dollar-Japanese yen jumped to the 107.80 area from a daily marginally largely above 107.00. Following comments by Mnuchin, Trump stated that it was possible to reach an agreement on trade when he meets his Chinese counterpart Xi on the sidelines of the G20 summit this weekend. These statements fueled risk-on sentiment and drove the yen lower as the 10-year U.S. Treasury bond yield gained traction and was up more than 2%. On the other hand, the upside impetus in the pair was capped by weak U.S. data. The U.S. Census Bureau announced that durable good orders declined by 1.3% in May, and the goods trade deficit rose to $74.55 billion in the same period. In commodities, Brent crude touched a fresh June high of $66, but retreated afterwards. The short-term spike was due to bullish inventory from the U.S. The Energy Information Administration reported that U.S. crude supplies dropped by 12.8 million barrels for the week ended June 21st. Analysts expected a decline of 2.8 million barrels in crude stocks. As a reminder, the American Petroleum Institute on Tuesday reported a 7.5 million barrel fall. The EIA data also showed that gasoline inventories were down by 1 million barrels, while distillate stockpiles fell 2.4 million barrels last week. The next key event for the market is the G20 summit due this weekend, while the Organization of the Petroleum Exporting Countries and its allies will hold meetings on July 1st and 2nd, after the original date was moved from June 25th and the 26th. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.